Hello everybody, welcome back to my YouTube channel. My name is Rishabh and this is our revision lecture number 8 of entire MCQ oriented fast track batch of CA final SPOM, that is corporate and economic laws. In this video we are going to cover your foreign contribution regulations act 2010. Please share this video, please share this entire series, this entire playlist to all your friends so that whoever is having any kind of concern with respect to law, so they can easily able to revise all the concepts of law and clear their examination in the very first attempt. One more thing, this PDF you can get into the Telegram channel, the link of which is given into the description. Please do join that channel so that you are aware of all the new notifications, all the new videos, all the new content that is coming onto this channel. That's all about it. Now without wasting much of time, let us begin. Foreign Contribution Regulations Act 2010. The objective is to regulate the donations that are coming into India from outside India to the NGOs, trust, Section 8 companies. So this is the main intention, in order to regulate whatever the amount of money that is received from outside India to India in form of donations to these NGOs, trust, Section 8 companies. Now we are going to learn some relevant definitions under this chapter. First one is foreign contribution. Now the chapter name is Foreign Contribution Regulations Act 2010. Now, what is the meaning of foreign contribution? What you will call something as foreign contribution? Now, it means donation, delivery, and transfer. That means donation, delivery, and transfer made by any foreign source of any article, any currency, or any security. You can mark this as okay. We will learn this chart. Foreign contribution is equals to donation, delivery, and transfer of article, currency, and security. However, article does not include a immovable property. This is what the proviso to this says. Except personal nature gift if market value is up to rupees 1 lakh. That means if you are receiving any money from outside India, any kind of security, any kind of currency, any kind of article from outside India, that is constituted as foreign contribution. However, any kind of immovable property is not constituted as foreign contribution. Along with that, any kind of article you have received and the market value of such article as on the date of receipt is up to rupees 1 lakh, and it has been received from one of your relatives outside India, then in such a case this is not covered under foreign contribution. That means this is not a foreign contribution under Fcra Act 2010. Now security ka definition is given under Fcra Act 1956, and currency can be Indian and foreign as well. If more than rupees 1 lakh, then if so this for this point you can relate with this. If there is a gift received from outside India from your relative and the market value is more than rupees 1 lakh, then in such a case you are required to intimate such an gift to the central government within 30 days in form number FC1. So this FC1 and all are relevant from the MCQ perspective, and this 30 days timeline is also relevant from MCQ perspective. Now, commercial transactions are not covered under foreign contribution. Commercial transaction matlab you sold some goods outside India and you are receiving payments for such goods, then in such a case that is also not covered under your Fcra Act. Money received, for example, we will understand money received from foreign client in lieu of goods or services sold, then that is a commercial transactions, and therefore Foreign Contribution Regulation Act is not applicable. Now, we learned over here that any kind of money means donation, delivery, or transfer made by any foreign source. Now, what is the meaning of this word foreign source? Foreign source stands for any government of any foreign country, territory, or agency of such government, any international agency, but the international agency shall not include, but these are excluded, that is United Nations, International Monetary Fund, IMF, and World Bank are excluded from the international agencies. Matlab, if you are receiving any kind of contribution from these, then this is not constituted as foreign source. Foreign company and corporation outside India, which has been incorporated outside India, trade union in foreign country or territory, foreign trust, society formed registered outside India, and any citizenship of foreign country is constituted as foreign source. However, if you are receiving any donations from a person who is a non-resident in India, then such kind of donations are not constituted as foreign contribution, because such person is still an Indian citizen, even if he is an NRI, but still he is an Indian citizen. However, there is a second example which talks about an individual who is an individual who is an Indian who has acquired foreign citizenship. Then, in such a case, such person would be deemed to be an foreign citizen. So that person would be counted over here, citizen of foreign country, and therefore any kind of money you have received from such a person, that will be constituted as foreign contribution. I hope both the examples are clear. Now, First, point number 3 talks about persons who are prohibited from accepting foreign contributions. Matlab, these persons cannot accept foreign contributions. Who are those? Candidate for the election. A person who has is a candidate for the election. Correspondent, columnist, cartoonist, editor, owner, printer, or publisher of registered newspaper. Public servant such as judges, government servant, including employees of corporations which are owned or controlled by the central government. Member of legislatures are also covered under here. Political parties and office bearer thereof. Here it was the candidate for the election. Here is the political party and the office bearer, like the president, etc., of the political party. News channel agencies. Here it is a trick over here. Except community radio stations such as Krishi Darshan. That's a kind of educational Krishi related educational channel, news channel is there, wherein the training is given provided for the kind of farming. Then in such a case, that news channel is not covered over here, but any other news channel which is covering any other news, that is covered over here, and such news channel is prohibited from accepting foreign contribution. Individuals, associations prohibited from accepting foreign contribution. This is your point, last point. Now, person resident in India or person resident outside India shall not accept foreign contribution on behalf of political party. Any person shall not accept currency, etc., if he knows that money is directly or indirectly deliverable to the political party. I am Rishabh, I am receiving any kind of money, and I know that this money is directly or indirectly going to be submitted, going to be deposited with political party. Then in such a case, I should not be accepting that kind of donations, those kind of monies, etc. Now, point number 4 talks about persons who are not covered under section 3. That means these are the persons who can accept foreign contribution, who can accept the foreign money, even if they are covered under section 3. Section 3 is this section. Okay, so who are those persons? Means persons covered under section 3 can accept foreign contribution by way of salaries. All the above here. Candidate for the election, maybe public servant, correspondent, columnist, cartoonist, member of legislatures, they can accept foreign money. However, they can accept only in such a case by way of wages or salary from any foreign source in ordinary course of business, by way of payment in course of international trade or commerce, as an agent of foreign source, by way of gift or presentation made to him by as a member of Indian delegation from his relative. They can accept receipts covered under FEMA, and by way of scholarship, stipend, or any payment. So these kind of payments can be accepted by the persons who are covered under section 3. What is section number 3? Section number 3 is your entire this part. So any persons covered over here can accept all these kind of transactions, money under all these kind of transactions. Now, restriction on acceptance of foreign hospitality. So what is the meaning of foreign hospitality? It means an offer, not being a casual one, made in cash or kind by foreign source for providing a person with the cost of travel to any foreign country or territory with free boarding, lodging, transport, or medical treatment. This is considered as foreign hospitality. Matlab, an Indian origin citizen is going outside India, then any person who is situated outside India, that means any foreign source providing any kind of cost of travel, providing for free boarding, lodging, transportation, medical treatment, then that is considered as foreign hospitality. Now, who cannot accept foreign hospitality? Member of legislature, political parties and office bearer thereof, judges, government servant, and employee of any corporation or any body corporate which is owned or controlled by the central government. However, these persons can accept foreign hospitality having prior approval of the Ministry of Home Affairs, that is MHA, is required for the above. However, in case of any emergent medical aid needed on account of sudden illness, then intimation to the central government is to be made within 1 month of such hospitality, and in such a case, prior approval of central government is not required, because if you go for a prior approval, then there might be delay in prior approval, and such person can die because of non-availability of prior approval. Then therefore there is an exemption being granted from the prior approval of central government for accepting of foreign hospitality in respect of emergent medical aid or due to sudden illness. However, no intimation is required if value of medical aid and hospitality is up to rupees 1 lakh. Then in such a case, there is no kind of intimation required to the central government, even if you have received foreign hospitality. Right. Now, what is the manner of receiving foreign hospitality? Any person specified in section number 6. This is your section number 6. Any person receiving hospitality in section 6 who wishes to avail foreign hospitality shall apply to the central government for prior permission in form number FC2. For the acceptance of foreign hospitality, application for prior permission along with the invitation letter to be submitted to the Ministry of Home Affairs, and it should reach to the central government at least before 2 weeks of the journey to the central government office. No central government prior permission is required in case where expenditure is met by the central government itself or by the public sector undertaking, where person is going in his personal capacity, where hospitality by an Indian national is being provided to such a person, assignment, he is going outside India for an assignment on salary, parliamentary delegation, training course, or visit for due to bilateral agreement. Under these circumstances, there is no need to have prior approval of the central government. Apart from this, there is also one more point which we had discussed earlier also, that is on emergent medical aid. There is no need to have prior approval of the central government. However, an intimation to be made if the amount of the value of medical aid hospitality is more than 1 lakh. A person who is registered and granted a certificate of registration or has obtained prior permission under this act and receives any foreign contribution shall not transfer such foreign contribution to any other person. Matlab, if any trust, foreign company, of an NGO is receiving any kind of foreign contribution, then such foreign contribution is not to be transferred to any other person. Point number 7 talks about restriction on utilization of foreign contribution for administration purposes. Matlab, whatever foreign contribution you have received, you have to utilize it for the purpose for which you have received it. This is point number 1 talks about. Point number 2 talks about foreign contribution shall not be utilized for speculative business or speculative activities. Now, what are those speculative activities? Speculative activities include any kind of activity or investment that has a risk of appreciation or depreciation of the original investment, including investment in the mutual fund or the shares. That means any kind of foreign contribution you are receiving, you cannot invest such money in mutual funds, in shares, or any kind of investment equipment wherein there is a risk of appreciation or depreciation of the original investment. And point number 2 talks about any kind of participation in any scheme that promises high return, such as investment in chit funds or the similar assets. Then those activities are constituted as speculative activities, and therefore you cannot invest any kind of foreign contribution in such activities. However, a debt-based secured instrument is to be considered as a normal activity and therefore not considered as speculative activity. No sum exceeding 20% of foreign contribution received in a financial year to be utilized for administrative expenses except prior approval of the central government. Matlab, let's say you receive 100 rupees of foreign contribution, then up to 20 rupees of foreign contribution can be spent as administration activities, and if you are willing to spend more than 20%, then you need to have a prior approval of central government. Now, what is the meaning of administration expenses? So admin expenses include these and exclude these. Matlab, the remaining 80% can be spent on any of these two activities, but the 20% up to 20% can be spent on these 6-7 activities. So if you give it a read, you will be able to easily understand and bifurcate this. Point number 8 talks about central government may issue prohibitory order for contravention of article, currency or security, and such order may be served by hand delivery, delivered to the person or the agent, registered post with acknowledgement to due, or to a speed post to the registered office premise or the business place, or the last known address of the trust or the applicant, or if cannot be served, then affix on door or the conspicuous place in the witness of 2 persons. Point number 9 talks about section 11, that is registration with central government. Very important section from exam perspective. Any person who is having any cultural, religious, educational, social objects shall not accept foreign contribution unless such person is registered under Fcra, Foreign Contribution Regulation Act 2010, or such person has obtained prior approval from the central government. Now, how can you obtain prior approval of the central or the registration? So you have to make an application. For the registration, you have to make in form number FC3, and for the prior permission in form FC3B. Prior permission, let me tell you, for a particular transaction, a prior permission, prior approval will be granted by the central government for acceptance of a specific amount of foreign contribution or acceptance of foreign contribution for specific purposes. In such a case, prior permission is granted. Registration is granted for 5 years. We are going to study these in the subsequent part of this chapter. Point number 3 talks about if value of foreign contribution as per the application of prior permission is more than 1 crore rupees, then central government may permit such application in the installment, such receipt of money in India in installment. If any subsequent installment is to be received, that is to be received only upon utilization of 75% of the previous installment, then only the subsequent installment can be received into India. In case of prior approval, these 2 points are only with respect to prior approval. Now point number 4 talks about procedure for grant of certificate of registration. The word COR is going to be used ahead in short form only, so please just ensure that COR stands for certificate of registration. Now any person who is making application shall may have a Fcra account. If you are making an application for certificate of registration, for registration you are making an application, then you need to mandatorily have an Fcra account, and you should be minimum existence of 3 years. Form of application is form 3A, and if there is a if application is not submitted in form 3A, then application would be rejected. Central government may grant certificate of registration within 90 days from the date of receipt of application. If certificate of registration is not granted within 90 days, then central government shall communicate with the applicant the reason thereof for not granting such a certificate of registration. Point number E talks about certificate of registration shall be valid for a period of 5 years from the date of issue. So this MCQ was asked in my examination, what is the validity of certificate of registration in case of Fcra? So Foreign Contribution Regulation Act may, if you have been granted certificate of registration, then the validity is up to 5 years. Prior permission shall be valid for specific purpose or a specific amount of foreign contribution to be received. Now point number 5 talks about declaration of receipt of foreign contribution. Now receipt and utilization account along with the income and expense account, receipt and payment account and balance sheet is to be submitted within 9 months from the end of every financial year. Foreign contributions receipt in quarter to be placed on website within 15 days from the end of quarter, indicating date, donor and the amount of such foreign contribution. Point number 10 talks about suspension of certificate of registration. Means certificate of registration can be suspended for a maximum period of 180 days plus 180 days if there is any reasonable cause. Point number B talks about any person whose certificate of registration has been cancelled shall not receive any foreign contribution, shall not utilize foreign contribution in his custody without prior approval of the central government. However, even if you have obtained prior approval of the central government, you can utilize maximum of 25% of the unutilized amount of foreign contribution, and balance 75% is to be utilized upon revocation or cessation of suspension of certificate of registration. These are the provisions, and these are very important from exam perspective. If certificate of registration is cancelled, then not eligible to be registered for a period of 3 years from the date of cancellation. This MCQ was asked in my examination, saying that what is the cooling period for granting of certificate of registration. So the cooling period is of 3 years. Up to 3 years you will not be granted certificate of registration if your certificate of registration is being cancelled. The foreign contribution and the assets created out of it shall vest with the banking authority for a person whose certificate of registration has been cancelled. If such person is subsequently registered, then foreign contribution and any asset that is created out of certificate of the foreign contribution shall be returned to such person. Now renewal of certificate of registration. Application is to be submitted in form number FC3C within 6 months before expiry of the certificate of registration. That is, after 4.5 years, you have to apply for the renewal of certificate of registration, and fee for renewal is 5,000 rupees. Foreign contribution through scheduled bank account. Foreign contributions to be received in designated Fcra account in such branch of SBI at New Delhi. That means foreign contributions are to be received in SBI branch of New Delhi, SBI branch as notified by the central government in the official notification. That means any kind of foreign contribution you are receiving in India, that is to be received in State Bank of India branch in New Delhi only. Upon receipt of such foreign contribution in such a bank account, it can be transferred to any other Fcra account. However, no other sums are to be deposited in those Fcra accounts. These are the provisions with respect to Fcra account. Any person who has received foreign contribution shall online submit form number FC4, that is income expense account, balance sheet and receipt payment account within 9 months from the end of financial year, and every report is to be certified by a chartered accountant. Point number 17 talks about accounts and statements to be preserved for a period of 6 years. That means these accounts and statements are to be preserved for a period of 6 years, and if no foreign contribution is received in a particular year, then these accounts and statements are to be submitted. However, these will be nil. Point number 19 talks about intimation by candidate for the election. Any candidate for election who has received foreign contribution at any time within preceding 180 days of his nomination as candidate shall intimate to the central government or the both about the foreign contributions received amount, what is the source, what is the manner of foreign contribution, that means that the currency or it is a security, and the purpose of utilization of such foreign contribution. Now, next point talks about article, currency or security may be confiscated by the central government by any other authority if there is a contravention of these acts. Any confiscation under section 28 over here may be adjudged by court of session within whose jurisdiction seizure was made without any limit, and there is no limit with respect to any amount by the court of session. However, by court of officer not below assistant senior judge for confiscation in relation to article or currency up to rupees 10 lakh. So up to 10 lakh rupees by this authority and more than 10 lakh by court of session. Appeal to High Court if you have made an application to the central government for a certificate of registration or prior approval and such an application has been rejected, or certificate of registration has been cancelled, or order against section 29, then appeal can be made to the High Court within 1 month, plus additional extension can be granted of 1 month if there is sufficient reasonable cause. Revision of order by the central government. Central government may revise the order either by suo motu within 1 year maximum, and if the order is 1 year ago, then central government suo motu cannot revise such order. Upon application, central government may revise the order. However, the application is to be made within 1 year from the date when the order is communicated, or the date when the aggrieved party came to know of such order, whichever is earlier. Then central government upon an application can revise the order. That's all about your entire chapter. I hope you have understood all the concepts. If you have any other concerns, please let me know in the comment sections. And it's a humble request, please share your comments, please share all these videos to all your friends so that it can reach to the maximum people and can help be beneficial to all them also. Thanks a lot for watching. Thank you so much.